Be on the VTF. If anybody's able to post the YouTube link into the VTF, it's appreciated. Yeah, the prices and valuations on some of these electric car companies or electric car related companies are crazy. Okay, let me do the disclosure first. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRECIPIC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. All right. Yeah, so we got this BLNK ripping after the close, up 17% right now. On what was the revenue number? Was it $6 million? Oh my gosh, this is so funny. They only lost 11.5 million. Thanks, Big Z. Yeah, it's just crazy. I did a video on the RIVN today that should be hitting the Derrick the Trader YouTube at some point soon, just kind of giving my thoughts. I'm just putting this thing into some perspective. You know, it's really crazy. I get a little bit nervous about these like pre-revenue IPOs, but there's a very clear and solid bull case here. It is not a car company, it's a tech company, right? And as long as Tesla's able to hold up the way it is, why can't the car company that has never sold a car be the second most valuable United States-based car company that exists, right? But obviously the big thing there is the Amazon play involved in this. But at the same time, the pricing on this is so crazy. This thing's worth over $100 billion. I didn't trade this today, but there were some good trading opportunities in it if you were paying attention. Namely this one here at 1050 today. You know, gapped up a little bit big, and that's kind of why I took it off my radar for the day. I was like, oh, they're gapping this thing up a little bit too big, and I probably should have kept a closer eye. You know, quick little technical price correction, almost to the ADMA. ADMA catches up, it bases out, and then the break higher off the 5-minute base here was a solid trade. It's the only real solid trade I see in this thing all day. Maybe for people who like to do some scalp trades in the close, the break of this little bullish consolidation pattern to the upside on this bar here could have been a trade that you would take. I usually don't take these that much when there's not that much time left in the day, but it's such a new issuance that the risk reward might have still been worth it because they can run them so hard. I know Felipe likes those into the close type scalps. Yeah, our IVN is another one that's got basically no revenue. I was looking at the numbers today. For this coming quarter, they're expected to lose... How much was it? Let me check my note here. For this coming quarter, they expect to lose 1.28 billion. They expect to lose 1.28 billion with under $1 million in revenue. The company's worth over $100 billion. And I'm not here to tell you guys it's not. You know, I have no idea. That's the whole thing. Is like if you're trying to do like a fundamental type analysis of this RIVN, how can you? You know, there's no analysis to be done. This thing is worth as much as someone's willing to pay for it. And people are willing to pay for it because of the players that are involved. You got Ford, yeah, on steroids. You know, you got Ford, you got Amazon, Jeff Bezos, and just the Jeff Bezos quarrel with Elon Musk just can go to a whole nother level in this thing. But anyway, let's jump into our meeting in our typical fashion with a review of the market. I think we got exactly what we expected today. So SPYs finished up about 0.1%, Qs are up 0.36%, and the IWM is our relatively strong index today, up 0.75%. So what we spoke about in the morning meeting today was a little bit, I actually also made a shorter video on this concept pretty recently. It's the idea of buying a dip in a bull trend. So, every trader, in theory, would want to be able to sell every pivot high and buy every pivot low. That's the ideal perfect trader who's able to do that. The ideal perfect trader does not exist, and in my opinion, it's impossible to be able to perfectly time and sell every pivot high and then come back in and perfectly time and sell every pivot low. Keyword being every. Every single one, I think, is impossible. But you can strategically find ways to recognize when these short-term tops are coming in and uptrends, and then when the lower high is potentially coming in that leads to the continuation of that trend. And I think we did a pretty good job recognizing, at highs here that the VIX was moving higher with the market, that the market was extended but bullish, and to pull back a little bit on our heavy buying. And now the question coming into today is yesterday's low, is that it? Is this the pivot low, and are we going to get continuation? And I'm not sold on it. I'm not sold on it because I don't have anything here to grasp really as an actual long trade that this is the pivot. Because we know, let's assume for a second that the bull trend is going to continue. Let's start with that. And that's always a great assumption, right? Whenever you're looking at any trend, you should assume that trend is going to continue until it actually proves to you that it no longer can. That's a great rule so that you don't fight markets. Don't overthink the market. Don't think, oh, it's up too much, I got to short, it's down too much, I got to buy. Assume whatever that trend is going to last forever. So if we start with that as our kind of prerequisite thought process, and that's just easier money, then we should be assuming that at some point we're getting a lower high here that is going to lead to continuation of the current up move in the market. The question is, where does that lower high come in? And typically, those lower highs in an uptrend will come in somewhere in the equilibrium area. And that equilibrium area is a pretty wide range. You could get a pivot high above the 80 EMA, at the 80 EMA, in between the 8 and 21 EMA, at the 21 EMA. You could even get a piercing of the 21 EMA and then continuation. All of those things. So the question is, if you're trying to buy the dip in the uptrend, if you're trying to capture that pivot low to get heavier, how do you do it? And in my opinion, the way not to do it, which some people try to do, is just like buy at the moving average. Like, okay, it's here at the 80 EMA, so that's got to be it. I'm going to come in and buy because it's no longer extended. Or, you choose a spot. And look, we can take reasonable, educated guesses on where we would expect the pivot to come in and then start looking more closely at the market in that area. For example, I've commented on SPY 460, and I've commented on QQQ upper 380s. We got to basically 387 or so yesterday. But that's really just like a general educated guess. When QQQ got into that area yesterday, I'm starting to look at it more closely for any shorter term signals that could tell me that the market is attempting to build out that pivot that can get me a jump start on a smaller time frame off of a bigger time frame pivot low. But as far as just looking at this chart right now, looking at this daily chart to try to figure out what signal can we see to come in and buy that a higher low is coming in, I have really two main things that I look for. And it doesn't always work this way. Sometimes it just goes down and it goes up and it makes the buy very difficult. But a lot of times it also will give you one of these two signals that I like to look for. One is what I call a continuation hammer, which is basically would be a hammer doji candlestick coming in somewhere on this equilibrium. Maybe like, what I commented on yesterday morning was, all right, maybe we tail down into 460 but close closer to the 80 MA. Then we'd have a nice tailing candle here. That's a continuation hammer, where that can then be our potential pivot that we could be trading versus for the assumption that we're going to get continuation of our bull trend. So that's one thing that we're looking for. But I mentioned in this morning's meeting, we really didn't get that yesterday, right? Like, yeah, there's a little bit of a tail here in the SPYs, there's a little bit of a tail here in the Qs, but it's not big enough. It's not what I would classify as a real doji or a real continuation hammer that we can feel confident to lean off of that this is the absolute low. So I don't feel comfortable doing that yet. One of the other ways in which those pivots are sometimes created is by a weaker candle followed by an inside candle, and then the inside candle breaks to the upside. So we actually potentially have that second pattern coming in. Granted, it's Veterans Day today, so the bond market's closed. When the bond market's closed, that usually leads to lower volume for the equity market. Look at the volume on the SPY today. Just roughly eyeballing it, this looks like the lowest volume that the SPY has had at least the last 90 trading sessions. Yeah, and if you scroll out here, looks like the lowest volume. We had one low volume day here at the end of August when volume usually gets low. So it's a really low volume SPY candle today, which isn't necessarily terrible because it's an inside bar, and we typically expect our inside bars, because they represent a period of rest, to be lower volume candles anyway. So let's see if we can get the inside nub, because the other way in which that signal that is an actionable trading signal that I sometimes look for continuation of trend, and again, this could be a 5-minute chart, this could be a daily chart, it could be any time frame. It just so happens to be that we're talking about a SPY daily chart right now, is a weaker candle into the equilibrium area like we got yesterday, followed by an inside candle, and then the inside candle breaks up. So I think that means that for tomorrow, today's high is important. Really today's high and today's low is important for tomorrow. If this 465.29 breaks to the upside, I might feel more comfortable buying high versus either the inside day low or more ideally the absolute pivot low on the daily chart, with the expectation that this is the pivot here because of the inside and up. And again, it's key here in either circumstance, whether it's the continuation hammer that I'm discussing or whether it's the inside candle and up, you're buying on the way up. You're not buying on the way down. You're not trying to guess, oh, is it going to be the low at the ADMA? Is the low going to be 460? Is the low going to be 455? You're not trying to guess. That guesswork can cause you to endure a lot of pain. And again, I will take an estimate, like, oh, I think 460 might be a good spot, based on where we came from and kind of where the technical equilibrium area is, and look for it on a small time frame to execute. But I'm still, even in that circumstance, looking for the small time frame to execute. And now here with the big time frame, we have the inside day. If it's an inside day and up, we're buying on the way up, and we can assume reasonably and with a decent risk reward and probability of success that this could be the pivot low. So we'll see how that plays out. So SPY's inside day today, Q's inside day today, IWM inside day today as well with relative strength. And on the downside, if we lose the inside candle's low tomorrow, that tells you that yesterday's low was not probably a deep enough of a correction, and then we maybe are looking more for that 460 or even upper 450s area to see if we can get a higher low to come in, and that still is fine. Think about this, like I keep saying to people when we were pulling back over the last 2 trading sessions. I kept saying to the VTF over and over and over again, guys, don't come in and buy too early. Have some perspective on where we just came from. This move that we just had here in in October, October 14th through highs a few trading sessions ago, have some perspective on the degree of this upside rally. It doesn't have to be this shallow of a pullback. It could definitely be a deeper pullback. So if people were trying to buy 2 days ago thinking that that's it, it's a very difficult buy into this move. So we want to have some perspective on this pullback, that even yesterday's low might not be the extent of the higher low if we lose the inside candle. So that's some of the stuff that we'll look for from a technical basis tomorrow, and obviously we'll pay attention to how we pivot. As far as trading goes today, I really didn't initiate too much just because I was still waiting for more clarity from the market. It's kind of one of the things I commented on this morning, especially we were gapping up this morning after yesterday's weaker candle when I wasn't feeling certain that could be the pivot low yesterday, and that's why I said in the morning meeting today, what I said in the morning meeting was, what I want is an inside day today more than anything else, because that can give us some more clarity. Now we got it. But because of that, and because we always start from the big picture game plan, and then we work our way down to the smaller, more individual stocks, because of that thought process, there was no real need, in my opinion, to be overly aggressive today. Maybe certain stocks that are trading on news or whatever could be a focus. For me, this Peloton has kind of been a consistent focus. This turned into, I guess, my second best stock today. We talked about the Oldensmith overthrow trade. Say that in half jest, but basically, the break of when you have like 3 to 4 down days in a row, the break of the previous low and kind of come back up with the tail. The trade there would be to buy back through yesterday's low for basically an overextension bounce type trade. And we didn't even actually have to wait for the break back of yesterday's low. We actually were able to get even better pricing on that because I called out this hammer here. So this is a hammer candlestick at the low of the day on an increase in volume. So this candle represents retracement. And this is why multiple time frames are so important. We have to be looking at multiple time frames all the time. What does this candle in and of itself mean on a 5-minute chart? All this candle means on a 5-minute chart is that this stock should snap back to equilibrium, to the space between the 8 and 21 EMA. Oh, excuse me, sorry. That this stock should snap back to the space between the 8 and 21 EMA on its time frame. So this second bar here, where it basically touches the 8 EMA on the 5-minute, that's all you should expect based off of this candle if you're only looking at a 5-minute chart. But when we're combining multiple time, well, excuse me, I can't speak today. When we're combining multiple time frames, and we have this daily chart here, where we're looking for the Oldensmith overthrow trade. It's the 5th down day here in a row, and we break that previous day's low and we snap back. Again, this is kind of what I was saying a little bit, I think, yesterday. A lot of understanding trading and a lot of understanding technical analysis is understanding the thought process of the buyers and sellers who are already in the stock. So you might look at Peloton on the first down day at $57 and say, oh, discounted price and a company that I really like, let me come in and buy. And I wouldn't necessarily disagree with that thought process, but think about the dynamic of the participants who are already in the marketplace and what they're most likely going to do. Let's say you're just an investor or whatever it is, an amateur swing trader, and you got stock in this thing from $90, $100 or $110 even, and now this thing just gapped down at 57. What is your thought process? Your thought process is panic. Oh my God. If you're flat, you're looking at 57 as maybe a discounted price, but it's a higher probability on these types of situations that there's going to be greater panic selling from trapped buyers. And that's what did Beyond Meat end up doing today? See this Beyond Meat snap back. Someone asked about Beyond Meat in the morning meeting today, and I hadn't looked at the earnings numbers too closely, but the one thing I commented on Beyond Meat was I felt like that there actually probably weren't too many people trapped. And the reason why I thought that I had that thought process is because this thing has already been trending down for 4 months in a row and already broke some major support levels. So, for example, anybody who is leaning off of $100 in Beyond Meat, they're already out. They already had their opportunity all in here to be able to sell. So I didn't think that in this Beyond Meat that there would be as many trapped people. I think in a stock like this at this point, if you're still in this thing at $94, $95, it's probably because you're a vegetarian and you got a pull thesis on the stock and you'll own it at any price. So I really didn't think that there would be too many like trapped people, trapped longs who are puking stock in this, as opposed to this Peloton, which has been such a storied stock. It was still majorly holding above its 80 support. So people who are still in this off this 80 support, and now, and if anything, coming into the earnings report, maybe not the last 3 days into it, but overall coming into this earnings report, this thing had just started looking better again. So and this might have even gotten more new longs in this area who were not expecting this degree of a gap down. So now you got all these people trapped. And when it's this big of a down move, sometimes those trapped folks who are selling, that's a multi-day process. 2-3 days. And what that 2 or 3 days of selling can do, or sometimes even more, is it makes a stock that's already extended to the downside even more extended, and now you're giving these people 3-4 days to kind of wash out their selling and then maybe the oversold bounce comes in, a la the Oldensmith overthrow trade, which we just named that the Oldensmith overthrow very recently. I can't not smile and giggle when I say it. So anyway, back through yesterday's low. So going back to what I'm talking about understanding and utilizing multiple time frames. And this is what I was calling out here. I was like, guys, we have a high volume hammer here. And yes, all this means is a snap back to here. It's a counter trend trade. But if you combine that with like a red dog reversal, Oldensmith overthrow, whatever you want to call it, 80-40 trade, 80-20 trade, where you're coming back through yesterday's low, if this thing can get back above $48.30, that could be the signal that this thing is actually ready to give its real price correction higher now. I still have just a short-term profit target of $56 on this. That's all I'm looking for as a move to 56. But to pat myself on the back, I've been trading this consistently the last several days, and I've been doing a really good job just with my intraday trading on it. And then this today was kind of the icing on the cake, so to speak, was combining and recognizing that small time frame setup coming in. And this even goes back to what I was talking about a little bit when I was just talking about spies or Qs, when they come into the area where I'm taking an educated guess that the bounce could come in, looking for the small time frame that can give you a jump start. That's exactly what happened in Peloton today, where the small time frame is giving you the jump start. No one here on the team needed to be buying a price of $48.30 or worse. No one here on the team needed to be waiting for $10.50 when this was breaking intraday resistance to get a price of $48.60 to actually get the long. Everybody on the team could have been involved in this from a price of $48 or better, and then got the continuation. A little bit scary here, but look, a little bit scary on this pullback, but the low didn't break. So trade was still intact, and if anything, this then became the first higher low that then led to a higher high that created a reversal short term of the downtrend that Peloton's been in. So that was definitely a focus for me, and like I said, my second best name of the day. My only real thing that I really lost money on was trying to put on some scalping trades on this PaySafe, this PSFE. Was just destroyed. This is another one to go back to understanding people are trapped or not. People are definitely trapped in this thing. But I also feel like, and I guess I was wrong in this thought process today, that, people are trapped in this PSFE for sure, which, as we know, can lead to, like we just discussed, sometimes 2, 3, 4 days of selling. But at a certain point, it's so destroyed that I feel like you almost, like, I don't trade options, but if you've ever got a call option that looks like it's going to expire worthless, sometimes you just hold it at that point, and maybe you get a little bit lucky. I mean, this thing is just so broken at $4 that I'm like, are people really going to be panic selling at this thing? Do people who are long this thing have any money left to panic sell out of? Where you might as well almost be better off if I was long and I was this screwed in this thing, if I was long from $8, this one I probably wouldn't be panic selling out of to, manage money. I probably would just be doubling down on it. So that's kind of what my thought process was on this, and I tried scalping it a couple of times, similar to some of the circuit broken scalp type trades I did in Fubo yesterday that I had so much success in. I tried to do a few similar trades in this PSFE today, and I really didn't have success. I had one good trade pre-market on it and like one decent other trade, and then a bunch of other spots where I lost money on it and ended up finishing down on it. So that was the only real thing where I lost any money today. But yeah, outside of losing a little day trading money on PSFE and doing pretty well with that Peloton, traded some SoFi back and forth still. SoFi hit my target today of $24, which has been my swing target on this twice. So I got out of it twice, and then I got out into 24. I reloaded around 23. I got out into 24, and I reloaded again. So I am back in this SoFi now, but not with a very large position. It did not close very well, but that's kind of what I thought was going to happen. If you guys remember in the morning meeting today, we spoke about Affirm and we spoke about SoFi. I just looked at that gap up into resistance was so big that it was going to struggle to to really kind of give continuation there. And that was basically it. That was my day. Just position management and focusing on those names. And that's all I got for you guys. So with that said, I am happy to look at any questions you guys got. Some funny comments here in the VTF you guys made that I missed. Justin saying that losing money is cooler than making money. And then Rich saying, we're not here to reason why, just trade or die. And then Steve, what does Steve say here? That I perfectly timed the sell on Peloton right at its high for the red candle. Yeah, I did have a good sale here that I called out when the volume was kind of picking up, and it ended up giving this short time frame shooting star. And again, this candle, this is just another candle here that we can review as a team for educational purposes. What does this candle mean? Reversal? Nuh-uh, it doesn't mean reversal. It just means retracement down to equilibrium, at which point the uptrend on this time frame should continue, because that's the trend at this point, is an uptrend. And that's pretty much exactly what happened. And obviously the stock ran out of time. But you get the shooting star that comes in on higher volume. It pulls back here to the equilibrium zone on a smaller time frame. Now we're looking at a 5-minute chart. And now look at this. Look at the pivot low. It's the other one I just spoke about. Negative candle, inside candle, up. And then you're resuming the trend. But before we were doing that analysis on what could happen in the future on the SPYs, and here we're doing it on a daily chart, and here we're doing an analysis on a 5-minute chart on what did happen. Next here from Cody. Could you speak about market psychology in terms of having greater conviction and not thinking about what if scenarios? Sure. Let me see here. So I actually had a trader today, I won't mention who sent me an email, with similar questions kind of along that thought process, basically saying, hey, I'm a new trader and I'm getting started and whatever, and so far so good, but I'm having trouble, with some conviction. I can get hesitant on my trades, things like that. And that kind of is in line here with Cody's question in the VTF, where we've got Cody asking about market psychology a little bit and having kind of conviction. So first of all, it's not unusual at all for newer traders to kind of feel this way. It's what we're doing when we're trading is very difficult, right? Because we're basically trying to I hate the term predict the future, though it is inherently what we're trying to do. We're basically trying to predict the future. I don't really like that kind of saying or thought process, because I'm just thinking in my own head right now. Are we really trying to predict the future when we're trading? It's like yes and no at the same time. Like, if predicting the future means, like, my thought process really on any trade is that anything can happen. And the reason why I'm going long or short or entering this trade is because I think that the risk, reward, and probability of success are lined up in my favor, where in the long run I'm going to make money. In the long run I'm going to make money. But on any individual trade, anything can happen. So it's like I'm really not trying to predict the future. The extent of my predicting the future is like I'm buying the stock and it's like, okay, anything can happen now. But at the same time, I'm also kind of trying to predict the future because I feel like there is a higher probability of the following things happening, and this is a situation where I can have a trade where I have the risk reward that makes sense in conjunction with the probability that I think it's most likely that the market's going to move higher or the market's going to move lower, or whatever it is. But what we're trying to do always, and this is where I think new traders struggle, is we are trying to anticipate the moves that are going to happen and not react to the moves after they've already happened. So how do we anticipate? What does that mean? Well, you look at a breakout, right? Or even to go back to, I still have the Peloton chart up, right? Even if you're looking at this Peloton, what is my thought process here? What am I anticipating? I am anticipating that this higher volume hammer could lead to a retracement higher in the stock, and that retracement higher in the stock could lead to a break of yesterday's low coming back up, that can lead to the Oldensmith overthrow trade that can give a bigger picture bounce in this thing, where I can now potentially come in. Think about this trade from a risk reward perspective, right? You could have come in and had risk here of less than 50 cents for reward potential. I'm looking for a move to 56 bucks on this for reward potential of $8 off of, less than 50 cents worth of risk. That's a great risk reward, right? That's what we're looking for. But I'm anticipating all that. I'm not waiting and seeing, oh, it went and it's all the way up here, and now coming in and buying $49 versus that low and having like a terrible risk reward. So we want to anticipate that those moves are going to happen, but it's very difficult for a new trader to think that way, especially because you haven't seen enough yet because you're new. A lot of trading is experience. It's like playing sports. If you've never played basketball before or whatever, you're not going to be able to play a one-on-one against like an NBA player. It's just not going to happen. You've got to have a lot of time and practice and learn to dribble and then learn strategy and then have seen enough repetition of, if I make this fake, I can get past the defenseman. If I make this shot, I can make the basket. Or, this is my higher probability situation to be able to put a score on in the game. Right? It's really the exact same thought process here, but when you're a new trader, you just don't have enough experience yet to have the conviction to be able to do it, but that is also inherently what we want to do. And it's a big mistake to see a move occur and then get into a trade. And that's why when traders ask in morning meetings, and it happens like literally every day, for me to look at a stock that had a big move yesterday, I say, okay, maybe it gives another big move today, but it's a day two. You should have been in it yesterday, especially if there was oftentimes there was a setup yesterday too. This great setup, it worked great, it had this huge move, and now it's the next day and the trader's asking me if they should get in it. That's reacting, not anticipating. Anticipating is recognizing the factors ahead of time that led to that bigger move initially. So if the premise is that we never know what any one individual trade can actually do, or if it can work or not work or whatever it is, so we're not predicting the future, but that in the long run, by identifying these factors of risk, reward, and probability of success, we can create consistent profitability. If that's the premise, then inherently, when your edge lines up in the market where you see a situation like still this Peloton that I have up in front of me, that you execute it, and this is where it gets really hard. You can't care what the result is. You can't care what the result is. If this trade pulled back here on this bar when it pulled back and broke that low and stopped me out, you can't care what the P&L is. You can't care that you lost money, and you also shouldn't care that you made money, because it's one individual trade. And as long as all of the premises of the trade are sound and it's going to lead to consistent profitability in the long run, what you made or lost in this trade doesn't matter. It matters if you don't have good risk management. It matters if you're like, I'm risking my entire account on this trade, so it needs to work. But then you've got other problems, right? Because there's other things that are wrong there. Another thing that we all need to do all the time, regardless of experience level in trading, is constantly recheck to make sure that the premises of our trading that are leading to the edge that creates consistent profitability haven't changed, right? Because market environments are constantly changing. So a certain type of trade or whatever that's working really well for you in this market environment might not work very well 6 months from now because we're in a bear market instead of a bull market, or volatility declines dramatically or volatility increases dramatically, right? Like one of the major variables changes and you have a different type of market environment. So even experienced traders need to be constantly reassessing that their edge still makes sense as the market evolves over time and makes the kind of adjustments that are going to be necessary for success. So that's that. And then psychologically also to answer your question there, Cody, about like what I call the what if game. So where the what if game comes from is, I think most of you guys know, I used to fight professionally. So I had about 40 pro fights. I won 2 world titles in 2 weight classes, 154 pounds, 160 pounds. I fought pro kickboxing. I had 12 round fights, and it was a great career while I was doing it. The what if game is saying that I apply on trading, but it actually comes from my fight trainer about fighting. The what if game is if you ever watch a boxing match or an MMA match or whatever, and you've got 2 fighters that are just kind of circling each other for very long extended periods of time in the ring. And the what if game there is, well, what if I throw my right hand, but he counters with a left hook and I get knocked out, so I'm not going to throw my right hand? What if I lead with my jab and he slips and comes with an overhand right and knocks me out, so I'm not going to throw my jab? What if I come in with a kick and he grabs my kick and sweeps out my rear leg, and he's a better grappler than me, and I end up getting choked out on the ground? And then what ends up happening if you play the what-if game in fighting is you lose because you do nothing. And if you're a fighter in the ring, you got to do something at some point or you're going to end up losing. And it's the same thing with trading. The what-if game in trading is, oh, well, what if I take this trade and then the market goes down and I get stopped out? Okay, well, maybe that's a layer of probability that's against the trade. But if you are constantly doubting yourself on every setup as the setup presents itself, then once again, you're only going to be reacting to trades after they work. Now you're the trader who's asking me in the morning meeting, hey, this thing gave this huge move yesterday. Can I come in and buy it today? Who is reacting and, again, not anticipating the move. So, what if it fails? What if it's a bad trade? What if I'm, missing a factor here or whatever? And again, this is also why the virtual trading floor is so important. Utilize the team. We can all utilize the team, especially newer traders in the group. We've got a great diversity on this team. Some of these guys have been trading professionally. I mean, Brandt is like 1,000 years old, and somehow, he's been trading since the Tulip. The Tulip event occurred in Amsterdam, however many hundreds of years ago, right? We got guys like that here. And, we've got other guys who are brand new, just kind of getting their career started. So we've got such a great diversity of a team and talent and different viewpoints and stuff like that. So if you ever are playing the what-if game on a trade and you're not sure about it or whatever, well, one of the best things you can do is just, hey, team, what do you guys think of, Peloton here at $48 off of this type of candle? And I'll give you feedback myself, or if I've stepped away from the computer, I'm sure somebody else is going to come in and do it. I hope that answers your question, Cody. A little bit of a long, drawn-out answer, but, we haven't spoken about market psychology here or trader psychology in an afternoon meeting in a while, and it's actually a really important topic, so I love when people ask psychology questions. Peloton executives held an all-hands meeting on Wednesday to address the company's recent stock dip. Business Insider's Kylie Robinson reports, according to the report, executives said the stock drop is frustrating to all of us and that its pandemic-driven sales boom made it undisciplined. Oh, boy. Rich, how did your first year of full-time trading go? I've been learning trading on ProDesk for about 9 months. I'm only up about 4% on my 50K trading account. I'm always scared of blowing up my account, so I hardly ever put risk on. This sounds like our last conversation here is working perfect for you. How long did it take for you to feel comfortable putting risk on? You don't feel good about the smaller results that you've had in 9 months. So Rich, again, I think your question here actually goes back to the conversation that we just had about market psychology. So it sounds like you're kind of playing the what-if game a lot. You're always afraid of blowing your account up, so you struggle to put risk on. Well, the fact of the matter is, you're playing that what-if game. You're standing there in the ring, and if you're not throwing any strikes, you're never going to be able to win. So, just keep focusing on your edge and work on that edge, and then execute your edge. It's prepare, perform, review, right? We prepare primarily pre-market, and then we have our morning meeting. We prepare for the day. We have a big picture game plan. We have trades. We perform 9:30 to 4. We perform what we worked on from our preparation. We execute our game plans. We execute our trade setups. Then we review after the market closes. You guys should all be doing your trading review, your trading journals, assessing every trade that you put on throughout the day to become a better trader in the long run. So you're doing the preparing, it sounds like, but you got to get in there and execute. And if you're worried about blowing up your account, then just do it smaller. And in the first year of your career, I don't think that you should be concerned about what your results are in the first year of a trading career. Seriously, the first year is about learning. The first year is entirely about learning. Year number 2, that's when we want to see the profitability come in. So I wouldn't be concerned about that. I wouldn't let that get into your head. I would just, again, focus on doing the right things consistently. I started in a very different market environment, so I don't like to compare, my results when I was brand new to what it is now. It's just very different. There were like tricks in the tape and stuff like that I was able to learn when I was a brand new trader, and I was disciplined with that approach on those tricks, which helped. That helped me to be able to make, decent consistency, pretty quickly in my career. So I don't really like to do that comparison. Reading Rich's comment here. Through the uptrend since the 321 low after a higher high, we've broken the daily 21 EMA to make a lower low before the next. I assume you're talking about the SPYs. Yeah, right. Look at the higher lows here on the way up. I think that's what you're talking about. Since March, yeah, those piercings have been pretty consistently been below the 21 EMA. Those deeper corrections. So if that holds up, then yeah, maybe we are looking at a move to 455, or that's where we broke out from all-time highs, right? 454. That would coincide with these other similar lows. Let's see here. Decan no good. Ooh, Decan G. I in theory want to be long this, and in practice I'm not pressing the button. So Holden here, how do you execute a red dog reversal or the Oldensmith overthrow? I'm guessing your stop is at the low of the day. Otherwise, you might have stopped out of Peloton a few bars after the start that you spotted. So sure. So the way to do it, the way that Scott would probably teach it is to buy back through yesterday's low versus today's low. So basically, he would be saying that you should be buying right here, which I don't love that buy because you're buying right into the 80 MA on this small time frame. But that you should be buying 48.30, and that your stop is the low of the day, and that's a potential red dog reversal. And it's not a bad trade. What I really like to do, and what I'm usually able to find, is, again, if we anticipate that this stock is very extended to the downside, it's that day 3, it's that day 4, whatever, we can oftentimes find the smaller time frame execution that can get us in early. So I love that by the time somebody else might be executing this trade for an entry point, I'm already covering my risk or something like that. So that's kind of traditionally how it's done, and that's kind of more my take on it. Yeah, exactly what Big Z said. Making educated bets on reasonable risk reward with good execution. Perfect. Robert here, a couple meetings ago you mentioned you prefer to buy 2 patterns in an intraday uptrend. I just went over this again today. Inside bar and up, and the other one, yeah, the continuation hammer. I was talking about that. Earlier in this meeting as well. Basically, when that hammer style looking doji comes into the chart there. From Josh here, RIVN is currently valued at $100 billion despite being unprofitable and only producing 56 cars. 56 cars. They're worth $100 billion. They've made 56 cars. Meanwhile, Ford is profitable, has sold close to 350 million cars since 1903, and is only worth $77 billion. It's crazy. But it's not a car company, it's a tech company. Big Z, thoughts on AMD and NVIDIA? Let's take a look. I mean, it corrected, I think, it corrected technically to the ADMA here on the daily. This is the upper band of equilibrium. This is where you'd want to see the pivot come in. Is it an inside day? No, it's not an inside day for AMD. I remember looking at this yesterday thinking that this pullback should also be a little bit deeper, but so far it hasn't been. I'm very cautious to buy here, even though it broke the previous day's high. I'm cautious to buy versus this low still at this point, given the move that it had. I think that this just needs more time. It's parabolic. And NVIDIA here, very similar. At least NVIDIA is giving us an inside day, so we have reference for tomorrow. Maybe I'm just getting in my own head. You could try to be long this versus today's low or yesterday's low. But just the degree of this slope here is concerning, where I would rather see this thing build out more, let these moving averages catch up, let these weekly moving averages catch up. Look how far away, look how extended we are on the weekly, still in NVIDIA, and the AMD weekly as well. The AMD weekly is like still extended and straight up. What's the difference between an Oldensmith overthrow and a Red Dog reversal? There is no difference. It's the same thing. All right, gang. It looks like it's approaching 5 o'clock. Looks like we're a little lighter on the questions today, which is just fine because we were able to really spend some time talking about market psychology. I see Josh trying to sneak in a question. If you were playing a firm for a gap and go this morning, would it have needed to gap above 168.74 or 168.74 or 176.60? 168.74. It's the absolute closing high. It's a tricky question. I probably would be looking at the more absolute level, but it's a bit sloppy. That's also why I don't like these more expensive names. Because if this was like SoFi, the sloppiness would be 20 cents. But because it's so expensive, you could make the argument that it could be anywhere from 163 all the way to this absolute high of 176. So it's definitely trickier. I kind of like to view these levels as closing basis levels and like absolute levels. So like, your absolute levels, it just trades through it. Your closing basis level is like, I need to close above this spot. So I probably would be looking at both to kind of give you my real answer on it. But it's also just a bit sloppy to begin with. The tail does matter. For inside days and up, do you look for the break of the inside days high, the high, definitely the high. All right, gang, let's wrap it up. I think it was a good day today, considering things were a little bit slower. So everybody have a great night. I'll see you tomorrow.